Start from the top.
Yeah. Yeah. So hello everyone. We are so sorry. We have been talking for 10 minutes and it hasn't been live. So
Right.
we're really sorry for that. We'll restart our stream again. We yeah we apologize for the delay. So I think it's working now, right?
Yes, it should be working now. Yes, it's
Yeah, I can
working
see
now,
it
Sonam.
on.
So I think we can start.
All right.
Yeah.
Yeah. So welcome everyone. Sorry for this small mishap. We are talking about the new India theme today, which is where we're talking about investing into the new India infrastructure companies. These are the companies incentivized by the government of India for their innovativeness, and we'll be talking about this. But not just that, we're not just talking about this new idea, but at the end of this stream, you will receive an exclusive discount from us. So please wait out. Please wait till the end of the stream. Please give us 20 minutes, and we are going to give you an exclusive discount at the end of the stream. So this particular theme, this particular presentation or themes, what do you think, Siddharth? What is it about?
I think it is more around investing in self-reliant India, right? Um,
Hmm.
with the upcoming policies, India has really become self-reliant, and there are certain sectors and stocks that could benefit from this particular theme. And I'm sure you're going to take us through that journey.
Yes, yes. So in this particular webinar, we're covering few key themes in the new infrastructure or new India theme, right? Like, so you have Make in India or AtmaNirbhar Bharat. You have China Plus One, which is bringing manufacturing from China to India, and the production link incentive schemes that are incentivizing companies to manufacture in India, right? And there are five pillars of this theme that we need to talk about. First thing is that with this theme we are trying to make a jump, a quantum jump. So we are not incrementally changing, but we are trying to make a big leap from low manufacturing in certain sectors to enhance manufacturing in those sectors, right? There will be a focus on infrastructure, but the focus will not be on building roads and bridges, right? It will be building infrastructure for the new India, which is more technology driven, which is more driven in manufacturing in some key sectors. Also, the demographic of India and the supply chain in the economy will be a big driver for this theme. So the sectors that we think will benefit from the Atmanirbhar India theme are manufacturing, but like I said, manufacturing not in, not manufacturing road and bridges and railways, but manufacturing in some key sectors like, your white goods, specialty chemicals, specialty metals, etc. A number of pharmaceutical companies are covered in this theme. Auto ancillaries, auto components, drones, etc., are covered in this theme. You have metals, but not all metals, only specialty metals, right? Alloys, etc., are covered in these theme. You have electronic components, semiconductors, smartphones, etc. Manufacturing of these things are covered in this theme. We have defense, right? So defense is a big spending for the government of India. They import a lot of defense components from other countries. So defense will be covered in this theme. You will have specialty chemicals. So chemicals uh, which are not the all the chemicals, but certain specialty chemicals are covered here, and then you have some infrastructure components also covered. We'll go into detail, a little bit more detail into these later in the presentation. So the first key thing, right, the first differentiator of this theme is the PLI scheme or the production linked incentive scheme. With this scheme, what the government of India has done is that they've identified 13 sectors where they're going to invest incremental almost 2 lakh crores in terms of capital, and they are looking to generate 60 lakh jobs, right?
And I
So
think so with these schemes, the government is investing in high capital intensive, heavy capital intensive sectors.
hmm, yes, yes. So these are all capital intensive sectors, and they need some sort of boost to start up, right? To take a bigger shape in India. So the government is incentivizing
Correct.
growth in these sectors by this scheme, right? And they want to make you know local manufacturing much stronger than it is with these schemes, right? Now, what are the sectors that are covered in this scheme? This is the most interesting part, right? This is where we have to understand where this theme is going, right? So you have auto components, right? So auto components, and this especially includes electric vehicle components and battery systems, etc., that are being incentivized. You have food processing, where you have ready to eat foods and things like that that are being incentivized for manufacturing in India. So not all food, but certain class of those. You have chemicals. So in chemicals, you will see that specialty chemicals, chemicals used in battery cells, etc., are being incentivized. You have automobiles. So automobile manufacturing, especially again in the electric mobility sector, are being incentivized. You have aviation, where drones are a big focus for the government. You have renewable energy. So renewable energy, which means all the green companies who are, you know, solar cell manufacturers, things like that are being incentivized. You have electronic systems. So in electronic systems, what is covered is your mobile phones, your laptops, tablets, PCs, servers, etc. So if you're manufacturing that in India, the government will incentivize you. There are a number of areas in pharma where these incentives are coming. So in pharma, you have three components. One being your biopharmaceuticals, generic drug, etc. Second is your API manufacturers and other intermediaries. And in category three, you have these anti-immune drugs, anti-cancer drugs, etc. Right? So these are all new sectors. You have medical devices. So we saw a number of IPOs coming into medical device sector. So those are being incentivized. Metal and mining, but not all metals, only specialty metals, right? And these specialty metals are, your electrical steel, alloy steel, specialty rail, etc. You have uh, telecom, but in telecom they're incentivizing the key engineering components of the telecom sector, manufacturing of those. White goods, which includes LEDs, AC, etc. The manufacturing of those is being incentivized in India. And then you have textile, and in textile also, not all textile, but only specialty textile, right, or man-made textile. Those things are being incentivized for manufacturing in India, right? And why does I mean, we like we said, we discussed this theme a few months ago, and right research has been a little slow in catching up to this theme. We will admit that, right? But why did we initially things were not it took time for actual returns to come into these stocks, right? Initially, Atmanirbhar was like a buzzword, but now because of the actual economic incentive that the government is giving, these stocks are actually seeing their margin expanding and their growth happening. So that what is the economic benefit of the PLI scheme?
I think with this, what will majorly happen is that the margins of these stocks and companies, right, that operate in these sectors will sort of increase, right? And when margin increases and you have incremental sales because of the PLI scheme, then the game really changes and the growth becomes, I would say, swift. Uh, Also, I think the
Yes.
timing of us entering into this particular sort of theme is appropriate. As you briefly mentioned, it wasn't very mature in the past, but just like a buzzword. But I think now
Yeah.
now there's a lot happening over here.
Yeah, it is taking shape, and because these companies are directly incentivized to do good in terms of fundamentals, and that is reflecting into the price. So this theme is tough to ignore, and that's why we have recognized and launched the New India theme. And like Siddharth said, that the sales are increasing, margins are increasing, profitability is increasing, so these companies will become attractive. And and because these companies are in growing industries, so the industry itself will take shape, and it will trigger, if done well, it will trigger long term growth in these key industries, which can become extremely profitable, which can give you extremely profitable stocks in the long term. Um, Now, the next aspect of this theme is the China plus one strategy, right? So, what is China plus one strategy? Uh, China plus strategy is that people are, a lot of businesses that had their manufacturing in India, or a lot of businesses that had their factory in India, are looking to move out of India, of China, and diversify their business to other countries, right? And why is this happening? Why are the big multinational companies like Samsung, Dell, Adidas, Sony, etc., are looking to move out of China? Right. So there are few key reasons, right? One, of course, is the geopolitical tension, right? So there is tension because of initially due to COVID, and then there's this Taiwan thing going on, a lot of other tension which leads to, and then the US the trade war against China, right? At a certain point in time. So all these things will make made China unattractive for manufacturers, and they want to take manufacturing out of that country, right? Secondly, the wages are rising in China, which is making it a little unattractive. The compliance in China is becoming restrictive. They are uh, they're working a lot on the ESG theme, right? So they are suppressing certain industries which are making manufacturing a little expensive in that country, which is why it is moving out from China to other geographies in Asia and in other places in the world. Did I say that correct, Siddharth?
Yeah, correct. I think that makes a lot of sense, right? Because if you look at the nature of China, it's more of a communist nation, right? And these things were in favor of China in the start, but now the game is changing. Wages were cheap, now it's becoming expensive. There's a lot of geopolitical tension. And then, as you mentioned, that compliance is getting restrictive and stricter. So it makes sense for a lot of these MNCs to actually move out. And that's why I think the China plus one strategy would be beneficial.
Right. And why is India benefiting from this strategy? So why is India benefiting is because India already has like a huge labor force, right? So we can be the manufacturers, and the government is incentivizing these things, right? So you have the PLI schemes coming in, which are incentivizing manufacturing. You have a massive market in India, right, which can cater to the demand. The digital infrastructure in India is evolving. It has grown in leaps and bounds over the last decade, and it is again growing. And then the labor cost in India is much lower compared to China, right? So this makes India a key beneficiary from companies moving out of China to
So
other parts of the world.
I
Yeah.
think also to add on to what you were saying, Sonam, that ease of doing business in India has sort of increased when you compare it to the past, right? When we got liberalized and versus now, that period also has been a factor in improving the ease of doing business in India.
Yes. Yes. So yeah. So and along with these, we talked about in detail about the PLI scheme and the China Plus One scheme. Other things that have really helped India is the corporate tax cut, right? So which has made ease of doing business in India much better. PLI is part of that strategy. You have anti-dumping laws, right, which have come in, which make India attractive. There is licensing for importers that again incentivizes manufacturing in India. So a number of other reforms, and even apart from these, a number of key reforms are coming in that are, making certain industry centers, certain sectors in India very attractive. So that is about that theme. Now I think I see a lot of questions that are asking, why right research? What is right research doing especially better in this theme, right? So,
I
so
think
how
we have a
we
bunch
went
of
about?
questions around this. So probably
Yeah,
this
yeah,
you talking about it, would address them all.
yes, yes. So yeah, so how we went about, identifying these sectors is that for each of the industries, right, that we identified will get impacted by this, we identified the stocks that will stand to gain, right? Now, we have 13 sectors and, more than 5, 6, 8 stocks in each sector, right? So the list of stocks is massive, right, that are being impacted by these three themes. So we were able to identify more than 200 stocks, at least, that are being impacted by this theme. And, it's not as simple as just picking, the stocks that are impacted and creating a portfolio, right? And how do you pick up the stocks to invest in that list of 200 stocks right now? And that is the challenge, right? So for that, again, we have used a quantitative methodology, right, which is very, very aware of the risk in the market, right? So when we see that there is low risk in the market, right, at that time we will allocate more to these stocks that are showing high momentum values, right? So even in the stocks that we have included, right, the 150, 200 stocks that we have identified, when the markets are good, we will go for those stocks that have high momentum values, right? And that makes sense that, the stocks that are doing well will gain momentum and you can invest into that. But when the markets are weak, right, when the markets are volatile, like right now, you will see that this theme also will include stocks that have low volatility, right? So again, we will dynamically shift the allocation within these 200 stocks that we have identified. It's not, as simple as, picking 200 stocks that follow this. We have done our back testing over more than a decade with that universe and try to identify the allocation methodology. So again, we will be tactical, we will be rebalancing it on an active basis, and we will be aware of the risk in the market. So what Right Research is doing better here is being aware of the risk, allocating to stocks that are suitable for the particular risk regime uh, in the overall New India theme, right? So, does that explain, what we're doing, Siddharth?
Yeah, I think that very well sums it up, right? Because there'll be times when there's rising momentum, and there'll be times when there's sort of downtrend as well. So I think it makes sense around the strategy that both of these
Yes.
times will have various sort of significance and various sort of implementation of our strategy itself.
Right. And then again, we are well diversified. We will not have, more than
Sure,
25% allocation in a particular sector. We will be
sure,
diversified across sectors, and,
sure.
any single stock will
Also,
not have more than 10% allocation. Yeah.
right. Also, Sonam, there were a few questions about the back testing bit. If we've done anything on that, if you could
Yes. Yes.
touch
So,
upon
yeah.
that, it'll be
Yeah.
helpful.
So this
Yeah.
is the back testing, right? So we have back tested it over, you can see 8 years of backtest here, right? Now on small case they don't show you backtested results, so maybe you wouldn't have seen this, but this is the backtested result of the New India theme, and you can see that in the 8 years it goes 10x. Obviously much of the growth comes after the COVID pandemic, because that is when the incentive has really come into these sectors, right? So a little weakness before that, it makes sense because these sectors are not being incentivized, right? So the actual game changer for these industries has come, you know, in the last 2, 3 years only, right? And that is what we are trying to capture. And you can see that we are very, very well aware of the volatility and the trends in the market, the regime in the market, and that's how we are allocating to them. So this is about the back testing. We have, spent a lot of time in back testing that, and on top of this, we have a risk management methodology where, if there is a sharp short-term drawdown, then we deallocate to liquid Bs to reduce the risk. So I hope that that sums it up, right? That is our methodology.
Yeah, I think that really helps, because if there's some sort of back testing done on past data, that definitely gives us some sort of space to understand what might happen and the effects of it.
Yes. Yes. So like we at Right Research are data-driven investors. So I don't have currently anything apart from the back testing that we do, and that's how we have been operating for the last 3 years. And that's why we have actually back tested this, and come up with a solution that we think is good, and that's only when we have launched it, right? We have not just
Right.
selected some stocks in few sectors and started a small case. uh, Now for the top stocks, so I think in the mailer that we sent you, we said that we will tell you the top stocks that not just the portfolio, but the top stocks that you can select in this theme, which are the key parts of our portfolio right now, right? So these are surprising stocks, right? 6 months have been very bad for the index, right? The last six
I
months have
think,
been really
yeah,
volatile.
very
So,
volatile,
but
I would say.
well, they're very volatile. But even in the 6 month horizon, 3 month horizon, 1 month horizon, these three stocks, which are key holdings of our portfolio, have been very positive. So, if you were to just pick up a few stocks from this presentation, you can pick up these three. One being HAL, which is Hindustan Aeronautic Limited, which is in the aerospace and defense sector. So it is gaining from the incentivizing in the defense industry. We have Bharat Dynamics Limited, which is again in the defense, arms and ammunition, missile systems, and you can see the trend that this particular stock has had. And then you have ITC. ITC is selected in this theme because it is in the food processing and agro commodities industry, right? So food processing is being incentivized, the ready to eat food, etc. So ITC is a selection based on that theme, and it has also given a very good trend in the past 6 months. So these are the three stocks that you can pick, and we expect the trend to continue. So if not anything else, you can pick these three stocks from our presentation. But why only pick these three stocks when we are giving you this particular portfolio at a massive discount, right? So this is the launch of this portfolio, and obviously we've started in a volatile time. We started this portfolio in the beginning of May, and the market has been very choppy since then. So obviously, this theme has also seen the ups and downs, but we want people to really invest in this for the long term. Look at it, go for a 6 month subscription in this theme. A 6 month subscription in this theme so currently costs around 590 rupees. So if you apply the coupon code new india 99, you can get it for 6 rupees. A 1 month subscription is around 100 rupees, and you can get it for 1 rupee. I will not suggest you go for a 1 month subscription. Please spend the six rupees and get the 6 month subscription, because that really you should stick with a theme for a long term. So we encourage you to go for this subscription. With this massive discount that we are offering, we want people to adapt to this portfolio, see the benefit of this portfolio, stick with it for the long term, because we actually, like we explained to you, we see a huge incentive coming in these sectors in the long term. And plus, talking about the current economy also, we are seeing volatility here and there, and we are seeing rate hikes and corrections, things like that, right? Which might continue for some time. But what we really expect is that the rate cycles will be over before you know it. It will take another quarter or a couple of quarters, and the rate hike cycle will be done both in India and the US. And when the rate hike cycle gets done, and the focus on growth is going to come back, right? The government is going to start spending on infrastructure, and when they spend on infrastructure, they'll spend on these industries, right? So these industries are going to gain massively as the volatility comes down. That is our huge confidence in these, and that is why we are promoting this for the long term. uh, so does
Yes.
that make sense, sir?
Yeah, I think this is a very good time, as we were talking about it through the webinar itself, right? This is a very good time to be invested in these sectors and these stocks. And Right New India is a curated basket of all of it, right? Which is very much based on extensive research and back testing, which you also spoke about. uh, so Sonam, we have a bunch of questions, right? So can we
Yeah,
take
so
that?
before we start on the questions, I'll do a quick demo on how people can invest in these themes, right? So, you know,
Sure,
you will
sure.
see Right New India in our small case page, right? This is Right New India, we will also flash the link here, right? Give me a moment. So flash the link on the screen as well. So this is the link for the Right New India portfolio. You will find that you can start with a minimum of 50K here, and the 1 month, 3 month, and 6 months are priced like this, but you are getting a 99% discount. So I would really make sure that I make use of it. The details of this theme are explained here, and this is what we talked about in this presentation. Obviously, there has been volatility in the market since May, and we've seen correction. And because this includes some small caps, it might have seen slightly larger correction than the large cap universe. Um, so if you want to subscribe to it, you can just click on subscribe now. When you click on subscribe now, you will be asked to fill in your contacts. You can log in with a broker, and the brokers supported by small case are all the large brokers. You can fill in your risk profile. So because we are investment advisors, we need you to do a risk profiling also, and then you can choose the plan and make sure to use the coupon code. Please make sure to use the coupon code New India 99 to get a 99% subscription. You will be done once you fill in, do the billing, and you pay the 6 rupees, and then you can come back to this page, and instead of doing subscribe now, you can do log in to invest, and you will see a invest now button here which you can click, and the investment will be done by a few clicks, right? So it's a very simple process. I just wanted to make sure that the people who haven't yet subscribed to us on small case also know how to go about it. Like I said, the coupon code is new india 99, and please make sure that you follow along. With that, Siddharth, let's go on to the questions. Let's quickly wrap that up as well.
Sure, sure, Sonam. So we have a bunch of questions. Probably I won't be able to take all the questions, guys. So please spare us to that. We'll definitely get back to you with the answers. So, um, so Sonam, do you foresee a longer term pain in the markets? And do we have a defense strategy in right research?
So we do see. So obviously, uh, we don't think that the pain is over in the market, right? There will be some pain in the market because yesterday the U.S. inflation came up 0.6%, right? Worse than expected. It was not something that anybody was expecting, right? So obviously, there will be some pain that is left. The rates will be hiked. Some are saying that the U.S. might hike rates by 75 basis points, right? Things like that will definitely happen, and that will impact equity returns. But I don't think it might dampen the returns too much. We are somewhere near the bottom, and because the rate hike cycle is happening at an accelerated pace, right? So India is at 4.9 right now. US is at how much? I think it is at almost 1, right? uh,
Yes, just about
yes.
that.
Yeah, so see, so India wants to take the rates to 6, right? So we are already at 4.9. So there might be like a couple of more 50 basis point hikes. Similarly, for the US, they want to take it to 2.5%. So they'll again do, 2 or 3 rate hikes, which will be accelerated. So this whole thing will get over before you know it. And in the process, it might bring down inflation, but it will also bring down growth, right? It will slightly dampen the sentiment, and the governments will recognize that the growth has dampened, and that's when they'll start spending money on infrastructure building, and especially in these key sectors. So that is why we think that in the next 6 months this theme is going to be very, very important, and that's why we're talking about. So obviously there will be some pain, and we have a very tight risk management. You can check the last 2 streams that me and Siddharth have done, right? We have talked all about risk management in the last couple of streams, and yeah, we do have risk
Perfect.
management.
So, Sunam, just to touch upon what you were saying, right? There's a lot of question around that. What is the ideal time horizon to be invested in New India, right? If you could give us, say, a minimum, and in the long term, how would we sort of quantify the time horizon?
Yes. So the minimum time horizon, see, like I said, I expect the growth to come back in the next 6 months, right? It might be in 3, it might be in 6, it might be in 9, right? You don't know. But the ideal time horizon, I think, at least the PLI scheme itself is 5, will last for 5 years, right? So, at least invest in it for more than 2 years, 3 years, right? And see it go. And I think once you see uh, the actual returns coming out of this portfolio, you will not want to exit, right? So that is what we believe that this theme can bring in. So yeah, obviously stick with it for more than a couple of years. So we have more questions for that. I think Siddharth has paused. So let me try to pick up a uh, few more questions from the chat, right? So somebody is asking that rather than updating existing portfolios, why are we introducing new portfolios? See, uh, uh, I mean, see, we have covered all the key themes that we think have been strong, right? And like I said, we really believe that there is a lot of potential in this particular theme. It might not be there in the next 3 months, and right now you're seeing a lot of volatility coming in. We've seen, like I showed you, that it's down 8% in 1 month. But we really believe that this theme will work in the long term, and it is one of the themes that we have to look at, right? If these sectors, these list of huge list of stocks are being incentivized by the government and their growth is increasing, then we have to focus on them, right? So that's why we started this. And hopefully in some times you will see the actual effect of coming back in this theme. Now somebody is saying that why do you that can you not do weekly rebalances? So like again, I said in the last stream also that we are looking to start reducing the frequency of momentum rebalance. I know that the weekly is a little bit of a pain, so we will watch it for maybe this month or so, and then we will probably shift to a monthly rebalance, right? So that's what we think is correct. Maybe if there is volatility, if there is something, we will rebalance in the middle of the month, but we'll shift the schedule to a monthly rebalance. Uh, Somebody is saying subscribing to so many small cases does not make sense to a retail investor. So yeah, I sort of agree. I mean, don't look at it as the number of stocks, right? Because we are giving it to you as a set of stocks, right? So let's say you have invested into one of our core baskets, let's say multi-factor, which should be a large allocation for your portfolio. So that covers your core portfolio, and then on top of it, you can add the themes that you really believe in, right? So if you really believe in the theme of, let's say, New India or innovation or let's say momentum, you can add one baskets or two of those baskets on top of your core allocation, and don't look at it as a set of stocks, right? Look at it as a basket that is following a particular theme. So that is what I would believe, because even anybody, when you create a mutual fund portfolio, you buy 7 8 mutual funds, right? If you are creating that portfolio, if you went and looked inside all those mutual funds, you will have 200 stocks, right? So obviously you should look at these as baskets following a particular theme. Uh, so somebody is asking, why is Right New India different? So like I said, that we have done our research to identify the stocks that are being affected by these themes. And second thing is that we will be tactical, and we are using a combination of momentum on volatility, being aware of the risk in the market to participate in this theme. So not just we're not just selecting a set of 20 stocks and you forgetting about it and letting it be. We are being aware of the market. So right now in this theme, you will see that you will have some. You will see, you will have IPC, you have all these large cap stocks which are low risk, right? And as the momentum becomes better, we'll see other maybe smaller stocks coming into this portfolio. Somebody is asking, what is your USP for this small case? So I think, see, uh, the stock selection, the research in selecting these stocks has been very strong that we've done. So that is one thing. And second thing is that the methodology that we follow, it is back tested, right? It is not a fluke. It's not like we're saying that select these stocks and see what happens, right? We and the theme will work. We've done a back testing and we have validated this idea. So we really believe in this. So I think we have put in a lot of questions, answered a lot of questions. We wanted to keep this particular uh, stream a little smaller, but guys, we have a community page, right? So I will flash the link to that one. We have a page called community.rightresearch.in. You can go to this particular link. This is a community of question and answers that we are trying to create with Right Research. So put in all your questions that you have for anything here, and we will moderate it. We'll try to provide all the answers. You can contribute with your answers to anybody who has questions. Let's create a vibrant community where we have a very good investment insights coming out of it. So let's take the discussion back to the community page. I will keep this stream short. Please, please, please do apply the discount that we have offered, the new India 99 discount that we did. Take it to your friends and family who you think might be interested. And it's an excellent opportunity to get entry into this one. And when it really starts to gain momentum and it really starts to pick up growth, you will see the benefit coming from this massive discount that we give us. So with that, I will end the broadcast. Thanks everyone for coming in. For any questions that haven't been answered, let's put in the questions in the community page, and uh, we will add all the links to this portfolio and everything else in our YouTube description. So thanks a lot, everyone. It makes a lot of makes us so happy that you guys came in on a Saturday and attended the stream. Thanks a lot. Uh,